Hi everyone. Welcome you all to today's webinar hosted by HDFC Bank in association with Cleartax. I'm Avantika Singh, National Head Partnership at Cleartax. Well, Cleartax is India's largest and the biggest e-filing platform, and we currently have more than 6 million users who file their ITR using Cleartax platform. Cleartax has partnered with HDFC Bank from last 3 years, and we together aim to make your ITR filing simple and easy. You can get your queries answered in this webinar. And now I would like to introduce you to Mr. Manish, who is a zonal head at SDFC.
Thank you, Avantika. Good evening, all. And I wish you all a very good. Indeed, this is indeed my privilege to welcome you all for this exclusive webinar on behalf of HDFC Bank. And we sincerely thanks to all our esteemed customer. We always, and also welcoming our prospective customer. I would like to convey that for all our existing customer, we will continue to be one-stop shop solution for all your banking requirement. Also, for with our dedicated key corporates managers, I hope they are serving you well. And any feedbacks, we happily welcome, be it lending or investment, or even our dedicated engagement activities for you and your corporates. We are always there, and we always delivered the products will be always given as the best ROI, and I assure you delivering the best of our services always. Now, just to give a perspective about today's sessions, which will be primarily on the IT return filing and understanding the Form 16 in a better way, available with the new tax regime and etc. I will now welcome Piyush without doing any further delay to take ahead the session. Thank you.
So hello everyone. Hi, my name is Piyush Goel. I'm chartered accountant by profession, and I'm here to help you out regarding the better understanding of the Form 16, as well as help you out how Cleartax help you while filing the returns. So Cleartax is, I believe that it's a simple and the best platform which you can use to file your income tax returns. So without making any further delay, we are proceeding further. So what today session is all about is about understanding about the new tax regime, as well as what is basics about TDS, basics about employee benefits, how CTC is different from salary in hand. So that is, of course, every employee has a question that the offer letter what they're getting, that CTC what they has been asked for, and the salary in hand is differ. Yes, definitely. Why it is differ, we'll discuss about it. Apart from that, what we'll see helping employees choose and understand the new tax regime. So there's a lot of confusion which there are two regimes right now, the old and the new one. So in which one they should go, which one is more beneficial for them. So we'll understand the basics about the thing. Apart from that, how the employees deduct TDS on their salary, then which options they should go for, which options give them the better investment plan and tax savings, and as well as we'll see what is the change about the EPF, superannuation fund, and the NPS in the new regime. So we'll discuss everything regarding the Form 16 as well as the filing of income tax return. See, that comes about the basics about TDS. TDS means tax deducted on salary. It's actually TDS stands for tax deducted source, but for here for the employees it's tax deducted on salary. That is whatever the salary income we are having. If that salary income is over and above the exemption limit, the employer needs to deduct TDS on our salary income. So TDS is deducted according to the slab rates. So see, we have a different slab rates in the old regime. What we have already seen, up to 2.5 lakh rupees, it is exempted. Over and above 2.5, up to 5 lakh, it's 5%. More than 5 lakh, up to 10 lakh, it's 20%. And over and above 10 lakh, it's 30%. So these are the slab rates. As well as the new regime has been changed, so there are different slab rates. So as per according which one we are opting, and the TDS slab income in which our slab rates are falling, according to that the employer deduct TDS for us. Now TDS compliance is mandatory for every employee, because whether the employee is falling under any tax slab rate or not, whether TDS is deducted or not, the employer need to deduct TDS, need to submit TDS compliances to the department. That is the most compulsory thing. So see, we'll see just the basic process how it's going on. So employees make a declaration. The thing is that suppose I'm having an income of 10 lakh rupees. Now that 10 lakh rupees, my tax comes to 1,12,500. But I make a declaration. Declaration of what? that is a tax savings or investments, that is under section 80C as well as 80D and other two sections there are. So over there we can see we made a declaration that yes, I'm having an investment plan which makes me savings of taxes. So that employees makes a declaration that is considered by the employer, and TDS is deducted based on the declaration. For example, I said I have an investment of 2 lakh rupees as well as I am having another 2 lakh rupees for my housing loan. So my 4 lakh has been given as the investment declaration. My net income comes to 6 lakh rupees. On that 6 lakh rupees, now employer need to deduct TDS. So final investments, and to see the first thing you will see the employer asked you for for these things at the starting of the year, that whatever the investment you are having, let us know so we can deduct it accordingly during the entire. And the final declaration comes in the month of Jan, and most of the organizations come in the month of Feb also. So that is because that is the last quarter in which if there's any up and down in the figures, they just let us know for the employees and they deduct TDS on that. If there's a requirement of maximum, the direct to be at the higher side, they direct higher side or at a lower side. So on the basis of your final investment, the directions will be happen in the last quarter, and the final TDS directions are made accordingly. So if you have any doubts, any queries, let us know. Just shoot a message on the inbox, and the moderator will be there to help you out. Moving forward, we'll see basics about employee benefits. What are the basics about the employee benefits? See, for example, this is a pro forma of a salary slip. So in this salary slip, the sorry, in this salary slip, you will see the income has been, my earnings has been divided into subcategories such as basic, HRA, special allowance, convenience, additional special allowance, on-call shift allowance, statutory bonus, and others also, depending on organizations to organizations, it depends on. As well as see, you'll see on the right hand side, deductions is there. What provident fund, professional tax, income tax, as well as any other deductions. It may be depend on organization to organizations. So see, this is the thing. This is the most important thing what we'll see, because our CTC is depending on this earning side that is on the left hand side. That, for example, if I am having a CTC of 12 lakh rupees, that is 1 lakh per month. So my 1 lakh will be divided in the left hand side in basic, HRA, special, and all these things. But what I'll get in hand will be based on the deductions what they are deducting. Provident fund, that is mandatory, 12% what they deduct. Professional tax, every person, every employee need to pay the professional tax on his whatever the slab income he's having. So basic maximum to what they are 2500 per annum. Income tax, depending on your income, whatever the income tax they need to deduct, they'll deduct. And on that basis, you will be getting the net pay. So this is a performer salary slip. Let's understand the each and every component, what it will help you out. Coming to the first point, basic salary. This is a fixed component in your paycheck and forms the basis of other elements of your salary. See, this is very important, basics, because I have seen many of the employee want the basic salary to be higher portion, because it helps you a lot in other schemes such as HRA, PF, bonus, and other few allowances calculated on your basic salary. Because your HRA is calculated on your basic, your PF is also calculated on your basic, everything, each and everything basic plus DA somewhere or somewhere only basic. So basic is the important part in your salary structure. Coming to second point is HRA. HRA is salary, because many of the employees shift from their hometown to the other states, other cities for working. They're living in a rented place. So that rent is also an allowable expenses, allowable deduction. So what you can get is through your HRA. Whatever HRA you are having, whatever the rent you are paying, declare to the your employer. Employer will calculate on the certain basis calculations given by the income tax department. On that basis, whatever the HRA is allowable to you, that will be allowed and will be reduced from your salary income. So HRA is an important part. Don't lose that HRA portion. Yes, if your HRA is more than 1 lakh rupees, that is mandatory to give your PAN number. If you're paying rent of more than 1 lakh, if you're paying rent up to 1 lakh rupees, there's no mandatory to give your PAN of the landlord. The third part is LTA, that is leave travel allowance. Salary employees can avail exemptions for a trip within India under LTA. The exemption is only for the shortest distance on a trip. The allowance can only be claimed for a trip taken with your spouse, children, and pets. This is the LTA, because every company gives the LTA depending on your source income. Then this is allowed because suppose you are going for, and it is not for an international trip, it's for a trip within an India, and that is allowable for you, your children, and your spouse, and as well as your parents. For that it is allowed. Then it comes to bonus. Bonus is usually paid once or twice a year. Bonus, performance incentive, whatever may be its name, It is 100% taxable. Performance bonus is usually linked to your appraisal ratings or your performance during a period and is based on the company policy. This is another important thing. Bonus that is 100% taxable. It may be a different name, maybe there from organization to organization based, but it is 100% taxable. There is no deductions, no exemptions for the bonus portion. Coming to next point, it is employee contribution to PF. See, in PF, we both contribute, employee as well as the employer. So coming to this employee, so government has taken a security initiative, because see, a businessman can survive, he can run a business after the age of retirement. But what about those salary employees? We have a limit of a retirement age. So what seeking that, the government has initiated the security issue for the salary employees, that what will, if they will retire, how they'll earn, what is the source, matlab, whether they will be able to save any money or not while working. So government has said PF is a social security which both employer and employee contribute 12% on the employee's basic. See, again, the thing is employee's basic salary every month towards employee pension and provident fund. That you can get it, you can withdraw after 5 years as well. That is non-taxable. If you withdraw within 5 years, that becomes a taxable portion. So it's for the future, for the retirement benefit plans. Then food coupon, that is maximum 2200 per month. Books and critical, whatever the expenses you earn for the company or for your own use, but for the company use, but for your betterment or for your enhancement, you can claim the reimbursement of that. Employee contribution to NPS, again I say, see, employers can contribute a maximum 10% of basic plus DA. DA stands for dearness allowance. So that is another thing. Then reimbursement for broadband or telephone expenses. See, right now what we are doing for work for home, and over here the any expenses, broadband expenses, telephone expenses, whatever you may incur, you can reimburse from your company by submitting the bills. Then standard deduction. Standard deduction is the thing what allows an employee to claim the flat deduction of 50,000 from total salary income. That is whatever the salary income you are having, either it's 5 lakh rupees, 50 lakh rupees, or 5 crore. Doesn't matter. It's given to each and every employee. A flat 50,000 will be reduced from your salary. That's the standard deduction given by the government. After that, professional tax, I said you earlier, professional tax or tax on employment is a tax levied by a state. The maximum amount what a person can pay is 2,500. What a state can levy from an employee is 2,500 only. It is usually directed by the employer, but when you file the return of income, if you see after the standard deduction, the next point will be you will find the professional tax that you can claim it while filing the return of income. Sorry. Now, what here we are understanding the new tax regime for financial year 2021. This is the most important thing. The thing is that all taxpayers to choose between the old or the new one. The first question comes to each and every employee, which will be more beneficial for me. Here we will give a clear picture which one will be more beneficial for you. Old regime has the same tax rates and same directions as financial year 1920, that is the last year. So we have the same tax rates and same directions. There is no change in the old. But the new, they doesn't have any deductions, and what they are having is a new tax rates. They are having no deductions and new tax rates. What are the new tax rates? Income from 2.5 to 5, it's 5%, because income below 2.5 it is exempted, you don't have to pay any tax on that. Income from 5 to 7.5 lakh is 10%. 7.5 to 10 is 15, 10 to 12.5 20, 12.5 to 15 lakhs 25%, and above 15 lakh is 30%. Earlier we used to pay above 10 lakh 30%. Now we used to pay in new one it's 15 lakh then 30%. See, we'll see which one is more beneficial for us. Now, how employees will deduct TDS on salary? How they'll do it? Now, employees to ask employees. Employers give an option to each and every employer which regime they need to follow, which regime they need to go for, either old or the new one. On that basis, they'll start deducting TDS. So that is the most important thing. Yes, the thing is that if you're not informing or if you're not able to opt any of the choose between any of them, so employer will automatically take the old one because that is by default. And once you choose, either it's for the old one or the new one, during the year you cannot flip, you cannot change to the other option, because the TDS is calculated on that basis only. Either it will be old or the new one. Yes, but you can change it while filing the return of income. You can go for that one. At time of filing of income tax return, you can change any of the option. Any excess tax return will be only refunded once ITS are filed and processed by the income tax department. That makes sure we file the return, we are able to get the refund, but after filing of return, we have to mandatorily e-verify the return. Once we e-verify the return, then only the return will be start getting processed. Until unless e-verify, it won't be getting e-process. A large number of employees are expected to stay in the old and make a final choice at the time of finding it. So it's a by default. I said many of them still stay for the old one, and then later on, if they want, they can move to new one. Now, options to save tax in the new regime. We say there was the same options are there for the tax savings and the investment plans in the old one, but in the new one, there are certain changes. Let's check it out. Employers contribution to NPS. This will continue to be allowed as a direction. Same here, employees, whatever the employer contribution, it's not an employer that will be allowed as a deduction. Make tax-free investments. You can continue to invest in EPF, VPF, PPF, NPS account. Make deposit to Sukanya Samriddhi account, PPF withdrawal, EPF withdrawal after 5 years of service. I said fully exempt from tax. Withdrawal from NPS are tax up to 60% of the corpus fund. Then leave encashment up to rupees 3 lakh rupee, gratuity up to 20 lakh, receive on retirement will be tax exempt. Opt in for these benefits. VRS compensations, if received, will also be exempt. Note that gratuity is fully exempt only for the government employees, not for the private sector employees. So gratuity will be taxable based on the certain calculations. Now, how to choose a tax regime so that you pay lower taxes? Which one will be more beneficial for us? Now your tax break even. See, we have a calculator. If you just check it out, which one is more beneficial, you can go to Cleartax. Income tax calculator is there. There's both the option. You can choose anyone which according to income, you need to enter your income details over there, and that will calculate you which one is more better for you. Now, a minimum deduction required to face the same taxes. In both the cases, if you are getting the same taxes, for that purpose, you have to say a minimum of deductions is required for me. The old and the new, which means if one goes beyond this number, one will benefit from choosing the old regime. If you are going beyond this number, then you are benefited from choosing the old regime. At 7.5 rupees, standard deduction is same in every slab, that's 50,000. Additional deduction is required 75,000. At 10 lakh rupees, additional deduction is required 1,37,500. At 12.5 lakh, 1,58,333. At 15 lakh, 2 lakh rupees. And after 15 lakhs, additional deduction is required is 2 lakh rupees is constant. So these are the minimum of deductions which is required to face the same tax rates. Now, maximum cap for contribution to NPS, EPF, and superannuation. There was a change, and the change is this: the maximum contribution towards the NPS, EPS, superannuation fund, RPF is 7.5 lakh rupees per annum per employee with effect from April 1, 2020. This cap has been introduced, that is of 7.5 lakh per annum. Earlier, there was no such cap, but this has been introduced. Contributions of employees beyond 7.5 lakh per annum will be considered as a perquisite of the employee, sorry, and taxed accordingly. So if any contribution by the employer or more or above 7.5 lakh, that will be termed as a perquisite and it will be taxable in the hands of the employee. What were the old limits there? The old limits with the NPS employer can contribute maximum 10% of his salary. Superannuation fund 1.5 lakh, RPF 12% of a basic. Beyond 12%, it was become taxable. Now, new limit is that considering all the three altogether, it is 7.5 lakh per annum. That is a new limit what they have introduced. Now, coming to this, these were the basic things what we have discussed. Now, what we need to discuss is the thing. Let's take a detailed view of ITR filing process through Cleartax. So Cleartax, I earlier said also, it's a simple and easy platform. You just need to enter the data. You just need to upload your Form 16 and everything is at your fingertips. Let's check it out. Step 1. Visit exclusive partnership page for HDFC Bank customers. There's a link is given. You can go HDFC Bank customers. Just log in using your credentials. Click on upload Form 16 now. You just need to click your upload Form 16 now if you have Form 16 in PDF format. If you're having any other format, you need to enter details manually. So click on your start your tax return. Step 2. You have to upload your Form 16 in the PDF format here and edit the details if necessary later. See, one thing is that we give entire details to our employer, to the HR of the company. So they'll do everything. Every job will be done from your side. So whatever you got in your Form 16 is the final thing. Until unless if you have forgot to give any final declaration while filing the investment declaration, or if you have any housing loan which you have missed out, or something else what you have missed out, so you can later on change it. Once you need to upload your Form 16 over there. In case you have a multiple Form 16 because you have changed the job during the year, so there's an option we support multiple Form 16 upload too. So once you upload your Form 16, it will be asking for your second Form 16, or you can proceed if you don't have any other Form 16, you can proceed further. Step 3, in this step, we read your Form 16 thoroughly and provide a summary of your income and deductions during the financial year. Click to proceed e-filing to file your income tax return. That will take you directly point number 5, that is tax filing. Over there it will show you gist of the income, whatever the income you're having, the source of income, that deductions, total deductions what you're having, and the net total income what you're having. And after that, if there will be any refund or taxes, whatever the thing is there, it will show you the gist of the entire thing. You can as well as see in the PDF format. Coming forward, step 4, in this step you need to enter your name. Suppose if a person is not having Form 16 PDF format, so what it need to do, it's a simple basic steps what he need to follow. He just need to enter his PAN number, his name, his date of birth, his father's name, address, and save. Please forgive me. Then step 4, what we'll see over here, we'll see the basic details what we need to enter and proceed further. Then what I'll say, if any person who uploaded the Form 16, the entire detail will be captured by our software using the Form 16, and they just need to cross check the things whether everything is fine or not. And if any changes are required, they can enter the same too. And the person who is not having the Form 16 PDF format, they can do in Excel. Using the Excel, whatever the performance as per Form 16, they can just enter details over there. Now coming to step 6, enter investment details for deductions to be claimed. For example, see, I say earlier also, if any person who is having Form 16 PDF but they have forgot to give the details, they can enter it manually over here. As well as a person who is not having Form 16 PDF format, they can enter the details manually over here also. So if you have not given the declaration at the time of to the HR at the time of investment declaration, you can enter details right now. Enter details as per ATC, any deductions what you are having which you have not opted for at that time, you can go for right now. You can enter details over there and save your taxes. So there is no such issue regarding that. Step 7, in this step you can populate your TDS details by uploading the Form 26s. Will populate your TDS details only. The another thing is that you need to download the Form 26s by logging to income tax portal. Once you log into income tax portal, you can able to download the Form 26s, and you just need to upload over here. So uploading the Form 26s will capture all the income sources what you're having on which TDS has been deducted, as well as the self-assessment tax paid or any advance tax paid by you during the year. That also will be auto-populated over here. Any TCS amount which you have paid while purchasing the motor vehicle, that amount will be also auto-populated over here. So everything will be done by our software. You just need to sit and upload the documents, nothing else. Just scroll and check the thing, everything will be at your fingertips. Step it, here you can add the details of taxes paid by you for the particular financial year. This tax include advance tax and self-assessment tax. So once you are uploading all the documents and still the tax payable amount is coming, you need to pay the taxes. The link is there, that will directly take you to the government portal. Over there you can, the data will be auto populated. You need to pay the taxes. Once you pay the taxes, download the challan, and taking from the challan, you need to enter the details over here in the point number 4, taxes paid, self-assessment tax. The 4 details they will be asking, that is your BSR code, challan serial number, amount, and the date of payment. These 4 details you need to enter, save the details over there, and everything will be done. Step 9, in this step you will have to enter your Aadhaar number and primary bank account number. Primary bank account number is mandatory. Whether you are having any refund or not, still you have to enter your primary bank account, that is mandatory from the income tax department. So if you are having, you just need to, if you have multiple bank accounts, you can enter multiple bank accounts, and in which bank account, if you're getting any refund, you can opt for any of the bank account. You just need to tick that in this bank account you want a refund amount. So that option is still available, is available for us. Step 10, this screen will appear in case you have a tax refund or no tax due. See, if I'm having a tax refund, it will be showing me that you are getting a refund. If there is a tax payable, we'll make the payment, we'll put the amount in self-assessment tax, then it will show to us no tax due. So further click on the proceed to e-filing, you will get an acknowledgement number on the next screen. That acknowledgement number you can find it on your as well as income tax portal, and that will help you a lot. So this was the basic steps and the easy steps what you can do through Cleartax for your income tax returns. Now I'll ask Mr. Ashish Rathore from HDFC Bank, who will be giving you all a gist about NPS.
Thanks, Piyush. Good evening, everyone. Hope you are taking good care of yourself and your family members. So I'm going to cover national pension system. But before that, I want to share a few data points why there is a need of national pension system. Okay, the first data point is, you might be already aware, but I just want to reiterate that the average age of an Indian is around 30 years. Okay, and in next 30 years, the average will increase to 60 or more than that. So at present, 100 million population is at the age of 60, and by 2050 this population will increase from 100 million to 300 million. That is, it is going to get triple from here. Okay, so one has to take care of those days. So basically what I'm trying to say is that we are growing elder, day by day, and there is a need of pension, and that's the reason government has initiated a national pension system. So that's the first data point. Now second data point is that you might be aware that a decade ago average life expectancy was around 65 to 70 years. Okay, however, with advancement in medical technology, it has increased from 65-70 to 75-80. Okay, so it is good 15-20 years you have to manage without any earnings. Okay, and for that you have to save, you have to plan your investment in such a way that in those years, for those 15-20 years, you should have regular income, right? So that's the second data point. Now the third data point is inflation, okay, which we do not consider. We just ignore the fact that there is an inflation, right? Okay, so you have to plan investment in such a way that it should give more returns, as compared to inflation. Fine. So let's say if the inflation is in the range of 6 to 7% or 8%, you have to invest into instrument, okay, which should give you returns more than inflation, in double digit at least, to beat the inflation, so that your savings and your investment should not be eaten away by the monster inflation. Okay, and NPS gives you that kind of edge. So that's the third data point. Now fourth data point is that there's a rise in nuclear family. Okay, earlier we used to live together with our mamas and chachas, and everybody used to help each other, and this is how we were brought up. But now people have moved from villages and towns to metros, to work, right? So it is an independent family one has to manage, and it is not just about a person; it is about the family also. Okay, so one has to take care of that as well, post retirement. It's not about just one person; it is about the family. That's the fourth data point. Now the fifth data point is on the social security cover. Okay, so if you look at the Western countries, social security cover is provided by the government to all the citizens. But in India, okay, government is loaded with a lot of liabilities. Okay, and hence they are not able to take care of the social security cover, and they have come up with national pension system. Okay, so all this data point put together made government to start national pension system. Okay, so I will cover the tax benefit, okay, the flexible structure as far as NPS architecture is concerned, okay, and it is a disciplined way of investments, and which will help you to build corpus over a period of time. But yes, the horizon is actually long, and it will create a lot of happiness when there is a need at the time of retirement or post-retirement. Okay, you will have this fund receivable to you on monthly basis, right? So coming to the history of NPS, okay, way back in 2004, government has taken an initiative to start NPS, and it was initially launched for central government of India employees and state government of India employees. So people who have joined government bodies post 1st January 2004, for them NPS is mandatory. So earlier government used to contribute towards the pension of the employees, but now they have shifted from a defined benefit contribution, defined benefit to defined contribution kind of a concept, wherein whosoever will opt for NPS will be eligible for pension. Later, they have opened it for all citizens of India also in 2009. So government is trying to cover the entire population. Okay, in 2011 it was actually open for the private sector, so we actually fall into private sector. So I'm sure that you might be having NPS account at individual capacity, and you would be managing it from last a few years. Okay, however, you can map your same PRAN, okay, or same NPS account with your corporate. Okay, so what are the benefits? So we are going to discuss about that as well. Okay, so there are three stages as far as NPS journey is concerned. Okay, the first stage is wherein you contribute while you earn. So that's the first stage, right? Now, second step is you get returns on your investment. So the corpus will start building up, right? The third stage and the final stage is that you will get pension. You will start receiving pension at the age of 60 and onwards on a monthly basis. That's the three stages: contribution and corpus build up, and then the third stage is when you start receiving the pension. So how does it work? Okay, so at the time of NPS application, you have to select the pension fund manager. Now you must be wondering that, it is initiated by Government of India. PFRDA is the regulator. PFRDA stands for Pension Fund Regulatory and Development Authority. But how come the private players has come into picture? So PFRDA has appointed private players to have more transparency and more professionalism. Okay, and we are one of the point of presence, which is like first point of contact for you. And there is a PFM who manages the pension fund. They are not into any other business. They are just into managing NPS funds only. So there are 7 pension fund managers appointed by PFRDA. From the private sector, SDFC, Aditya Birla, Kotak Mahindra, ICICI Prudential. From the public sector, LIC, SBI and UTI. These are the 7 pension fund managers. You have to choose, you have to select one pension fund manager at the time of applying. Okay, and you can shift from one pension fund manager to another pension fund manager if you are not happy with the performance of the pension fund manager. Okay, and this switch is allowed once in a financial year. Fine. And there is no tax evidence in shifting from one pension fund manager to another pension fund manager. That is the kind of flexibility which is actually offered in the NPS structure. Now, where this fund will be further invested? Okay, so this funds will be further invested by the fund manager into 4 asset class, which is appearing on the screen. Okay, government securities, corporate bonds, equity, and alternate assets. Alternate assets predominantly is into real estate funds and infrastructure funds. However, it is extremely risky. Hence, the exposure is capped at 5% only. Okay, now coming to the second asset class, which is equity. Equity investment will be predominantly into Nifty 50 and Sensex 30 stocks. Okay, exposure is capped at 75%. Earlier it was 50%, but based on the demand, because markets were booming, so PFRDA has increased the exposure to 75%. Right? Corporate bonds and government securities, low to medium risk fixed income instruments. So people who basically are looking out for double-digit returns, okay, they can park their funds, they can allocate funds into corporate bonds and government securities. If the risk appetite is more, then people can allocate more into equity and alternate assets to get that delta of 2 to 3%. Okay, that's the beauty of the product, because it will help you to give more returns as compared to the other instruments in the market, right? So these are the 4 asset class, and the fund allocation will be on your discretion. Fund manager will not decide. Okay, you have to decide at the time of application. So first you have selected the PFM, then you will have to select the allocation as well, okay, into this 4 asset class. So how you will do that? So there are 2 choices. One is active choice and other is the auto choice. So in active choice, subscriber actively selects the percentage of contribution. So let's say you want to contribute 1,000 rupees. Okay, so 500 you will allocate into equity, and balance 500, 250 into corporate bonds and 250 into government securities. The sum should be 1,000, and you will have to basically enter the percentage distribution at the time of application. Okay, and you have to manage it on your own. So people who have good understanding about the market, okay, and they have time to monitor their funds or portfolio, they can go for active choice. Else there is an auto choice wherein the funds will be allocated basis the age of the subscriber, and it would be based on the investment philosophy of risk appetite, wherein if the age of the subscriber is higher, okay, equity allocation will be less, okay, and debt allocation will be more. So as your age will increase, equity exposure will decrease, okay, and debt exposure will increase. So this is how the auto choice work. So there are three subcategories into auto choice: aggressive, moderate, and conservative. So you will have to select the subcategory as well. So it is completely in your hands. Okay, you are the fund manager of your own. Okay, if you are selecting active choice, and based on your instruction, further the pension fund manager will allocate funds. In case of auto choice, there is this predefined algorithm. Okay, so based on your age, the fund would be allocated. Fine. So that's on the auto choice. Now, here is the important slide of the presentation. So there are 5 key benefits to individual or employees. Okay. The first is exclusive extra tax benefit. I have prepared a separate slide on this. So we will cover that in the next slide. Coming to the second one, safe and well regulated. So as I said that PFRD is the regulator, they have appointed private players. So there is a lot of transparency in the system. Okay, they have monitoring and tracking mechanism in place. NPS Trust is also there, who reviews the performance of pension fund manager and who audits the activities of all the entities which are actually involved into NPS architecture. So it is well regulated scheme. So that's the second benefit. Now the third benefit, low cost. Okay, PFRD has kept the charges. PFRD has kept the fund management charges. The charges are as low as 0.01%. Yes, you heard it right. It is 1 paisa per 100 rupees. Okay, it is as low as that. So it is one of the low cost pension product in the world when it comes to fund management charges. And if you compare this with mutual fund charges, wherein the expense ratio is around 2.5% to 3%, okay, here you will save 2% to 2.5% every year for next 15-20 years. And itself, it would be a good saving and it will add to your return. Okay, and it will help you to grow your corpus much faster as compared to mutual fund corpus by paying less charges. So that's the benefit of low cost. Okay, coming to the fourth benefit, which is portable. So I'm sure that 20-30% of the population would be already having an individual plan, and you would be maintaining it from last couple of years or more than that, in fact. So you can link the same plan with your corporate if the corporate is registered under corporate sector model. If not, then please ask your corporate to approach us and we will definitely help them out to register for corporate NPS. And you can move your existing plan from individual category to corporate category. Okay. So once you open an NPS account, a 12-digit unique ID will be created, okay, which is called PRAN number. PRAN stands for Permanent Retirement Account Number. This will remain same throughout the NPS journey. This will not change in case of change of employment. This will not change in case of change of state or city. Okay, it is like your PAN number. Once you register, it will be there throughout the NPS journey till the age of 60. Okay, so one can move from individual sector to corporate sector and vice versa, right? So you would be having a question that you are into an employment and then you quit your job and start your own business. Okay, what will happen to my NPS and the portfolio? Okay, so your portfolio will remain same. The only tagging which would be changed is from corporate sector to individual sector, and you can do it easily. You can approach your service provider and they will do the needful on behalf of you, right? So it is portable in nature, right? Now the fifth benefit is flexibility. So as we discussed that you have to select the pension fund manager, investment choices. Okay, you can change the pension fund manager, you can change the investment choices. Pension fund manager, once in a financial year it is allowed to change. In case of investment choices, it is allowed twice in a financial year, from active choice to auto choice and vice versa. Twice in a financial year it is allowed. So it is very flexible. Okay. Coming to the next slide. Yes, you're reading it right. It is triple tax benefit, right? So first two the benefits is actually for the individual contribution. So individual contribution is eligible for deduction up to 1.5 lakh. Okay, and NPS also comes under the investment tool. Okay, however, 1.5 lakh limit most of the time it gets exhausted with your PF contribution, with your investment into insurance, okay, with your home loan principal component, and you're not left out with additional tax saving revenues. Considering that, PFRD, the regulator, has come up with an additional tax benefit over and above ATC. Okay, so individual contribution is eligible for additional deduction up to investment of rupees 50,000 under section ATCC D1B. This benefit is over and above ATC. So individual contribution 1.5 lakh plus 50,000, 2 lakh will be reduced from your taxable salary. Okay, I'm talking about individual contribution. I have not discussed about the employer contribution, which Piyush has also covered. Okay, now here comes the bigger one. Now, employer contribution up to 10% of basic plus DA. So in private sector, there is no DA. Okay, so 10% of basic is exempted, okay, under section ATCC D2, and this benefit is over above ATC and ATCC D1 benefit. So for example, if you have a basic salary of 10 lakh per annum, so 10% of 10 lakh is 1 lakh. Okay, so employer will contribute on behalf of you in NPS 1 lakh, and then individual contribution we discussed 1.5 and 50. So total investment into NPS 1.5, 50,000 and 1 lakh through the employer is 3 lakh. So the day you invest into NPS, okay, you will save, if you are into 30% tax bracket, you will save 90,000, okay, which is 30% on 3 lakh. 90,000, it is a huge amount. And just imagine you will save this amount year on year. So 30% plus says 33%, and then we spoke about 2% less charges. So 35% saving, tax plus charges. We have not discussed about the returns also, right? So that is the kind of benefit we are talking about as far as NPS is concerned. Now, this is how we have just tried to put across an illustration how it is going to benefit you in terms of beyond ATC. So there are two scenarios. One is without NPS, the other is with NPS. So basic salary in case of without NPS is 20 lakh, HR is 10 lakh, special allowance is 16.63, corporate contribution in EPF, okay, then gratuity. So total salary is 50 lakhs. Okay. However, look at the deductions. Okay, there is no deduction for corporate contribution in NPS and individual contribution in NPS. Okay, hence the total taxable salary is 45 lakhs plus. Okay, now look at the second scenario. With NPS, okay, basic salary is 20 lakh, same. HRA is 10 lakh. Okay, now here comes a catch. Special allowance has been reduced from 16.63 lakh to 14.63 lakh. Okay, and this particular difference, okay, is added as a new component and tagged as corporate contribution towards NPS. So 2 lakh is 20%. 2 lakh is 10% of 20 lakhs. Right? So here the salary is same. However, there is an additional component which has been added by tweaking the special allowance. So corporate contribution for NPS is deducted from any flexible component of the salary and invested by the corporate as an employer contribution. So hence there is no change in the CTC. However, there is a little tweak from special allowance or from flexi component, and there is an additional component which has been added. How it is going to benefit you? Look at this now. Okay, deductions here. So corporate contribution has been added, and then individual contribution towards NPS has been added. Now here comes the catch. Okay, total taxable salary in first scenario it is 45 lakhs. Here it has been reduced to 42.63 lakhs. Okay, so there is a change in the taxable salary by 2.5 lakhs. You will save 35,000. Okay, so this is the type of benefit we are talking about when you go for a corporate NPS. Okay, so there are 9 benefits to the subscriber. It is one of the cheapest investment product. You have the choice to select pension fund manager and investment choices. It is your individual retirement account. It has portability. It has a lot of flexibility. You can do your own contribution, and you can, employer also can do contribution on behalf of you. Okay, there is this tier 2 account, okay, which works like a mutual fund. However, there are no tax benefit attached to it. So all your contributions through the employer and the tax benefits is only for tier 1 account. Okay, and then you can reach out to us for managing all your grievances. Okay, there is an auto choice option if you are not able to monitor or track your portfolio or change your fund allocation. Then there is an auto option also, and then there are phase-wise withdrawal option which has been offered in the NPS structure. Right. Benefits to the corporates. So employer just acts as a facilitator to route NPS contribution through salary deduction. That's the role of an employer. There is no obligations, there is no liability on the employer. Corporate have to just register through us, and then we will help out for the rollout implementation in the organization as far as NPS is concerned. Administratively, NPS is hassle-free as compared to superannuation and other pension scheme handling. Okay, there are no paperwork, there are no filing, there are no cut-off dates, there is no challan which needs to be filled. So administratively, it is very easy and simple to handle. NPS account is managed independently by each individual. So account setup will be done by the employee, as well as exit is responsibility of employee. Employer will just act as a facilitator to route NPS contribution. That's the role of an employer. Okay, NPS is a voluntary scheme for private sector. As of now, it is voluntary. The kind of steps, the kind of measures which PFRDA is taking, you never know that after a couple of years, it might be made mandatory for even private sector. Okay, so as of now, it is voluntary, but you never know. So NPS can run in parallel to EPF, superannuation, gratuity, and any other retirement scheme. Okay, now transfer of superannuation fund is possible to NPS because PFRDA has permitted that, but employer will have to take approval from income tax department as well. Okay, and this particular component, I'm talking about the contribution towards NPS by employer, okay, is considered a business expense. Fine. So how to apply, how to register? Okay, so you have to log in to our website www.hdfcbank.com. You can see there is this personal tab. Once you click personal tab, in the middle of the page, there is this invest option. There are multiple options. You'll have to select national pension system. Once you select national pension system, a dedicated web page for NPS will open. It will have all the features, schedule of charges, eligibility, PFM options, investment options, everything is there. To open an account, you have to click apply online. Okay, it is seamless, paperless work to open NPS account. HDFC Bank customer as well as non-HDFC Bank customer can open account through our website. You just have to upload 4 documents: PAN card, photograph, specimen signature, and cancel save. These are the 4 documents which needs to be uploaded, and you will receive your PRAN within 15 to 20 minutes. It's that easy. How to access your account? Okay, so there is this user ID and password which will be issued to you, and you can manage your account on your own. You just have to enter with the username and the password, and you can view the dashboard. You can change the PFM details, your email ID, your contact details, investment choices. Everything can be managed on your own through online mechanism. Okay. Now there are exit options. So at the age of 60, you can withdraw 60%, which is tax-free, and 40% you have to compulsorily buy annuity plans. And if the corpus is less than 2 lakhs, then withdrawal is fully permitted. So that's at the age of 60. Now, if you are looking out for early exit or premature exit, which is allowed after 10 years of completion of the contribution, but you will not be allowed to withdraw 100%. You will be allowed to withdraw only 20%, and 80% goes into annuity plan. If the corpus is less than 1 lakh, then the full amount can be withdrawn. Okay. And the third option is in case of death of the subscriber, entire fund is given to the nominee. All withdrawals are tax-free. So that's on the withdrawal side. So there is this partial withdrawal also, which is similar to your PF withdrawal. Okay, PFRD has eased the norms. It is allowed thrice in the entire NPS tenure, and only 25% of the individual contribution is allowed for withdrawal. But there are specific reasons like for education, marriage, critical illness. Of lately, COVID-19 has been added under the critical illness category. Buying a house or purchasing a property or constructing a property, it is allowed. Okay, so that's it from my end. Thank you.